It's about that time of day again. My name is Joseph. Tuesday evening, July 24th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish with a spike in channel pattern, but location at the high of the weekly range is a horrible place to start buying. So my plan is to leverage a seller failure pattern for one more leg higher before we start looking to sell this sucker back down into the range tomorrow morning. The S&P is bearish and trying to retest this morning's low, but a key support trend line is standing in our way, and that tells me to look for selling opportunities using traps and buyer failures around this trend line tomorrow morning. Nasdaq is also bearish, this time with a flag pattern tonight, and that tells me to look for selling opportunities up above the high of the short-term channel tomorrow morning. And don't forget about the gold. Gold is bearish and trading down to the low of a triangle, telling me to focus on failures to sell the high of that triangle tomorrow morning. And we can't forget about the euro. Euro is bearish, but a recent spike in channel is telling me to wait for the buyers to try and fail before selling this market back down to that low again tomorrow morning. But I got a great newsletter in store for you guys and gals tonight. We get some flags, some triangles, some hidden channels, lots of great learning and earning opportunities in tonight's newsletter. Before we jump into the charts though and put the plan together, I need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. Also, if you have any questions about anything covered in this video tonight, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com and make sure you join our mailing list. That's right, upper left-hand corner, give me your name and your email address and I'll send you an email every time we publish something new here at School of Trade. Also, if you're on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I'm always posting charts, links, quotes, videos, all kinds of great stuff on my social media channels that you won't find anywhere else on my blog. Also, don't forget, how about some charts for tonight? How easy is this? All the charts from tonight's video, have them ready on your computer for tomorrow. Right where it says click here to download today's charts. That's right, grab those charts and be ready for tomorrow's session. And don't forget that free pass, upper right hand corner. If you're not a member here at School of Trade and you'd like to get a deeper dive and a behind the scenes look at everything that it is about being a client here at SOT, grab that free pass in the upper right hand corner. Don't delay on that. And then of course, any questions? You can call me toll-free in the office anytime you need help. You can always send me an email to jj@schooloftrade.com. Drop me a comment in the comment section below, right, or hit me up on live support on the right-hand side of our website. All right, let's jump right in here. Hope you guys are having a great Tuesday. Boy, I had a great day today. What a great day. What a great week it's been so far. Lots of tradable opportunities across all the markets we talked about in last night's newsletter. But you know how we roll here at School of Trade, right? We're only as good as our next trade. So let's get ready for tomorrow. Tomorrow's July the 25th. It's a Wednesday, and of course, anytime we have a Wednesday, we always know there's one big news event that crude oil traders are watching, and that is the weekly inventory report. Tomorrow morning, 10:30 a.m. Eastern Time. If you're a crude trader like I am, right, this is usually one of the most challenging days of the week. My cutoff on Wednesdays for oil trading is 10 a.m. Eastern Time. Once that 10 o'clock shock hits, right, I'm sitting on hands for crude. Now, good news is the strategy works on everything else, right? So we may not trade oil after 10 a.m. on Wednesdays, but we'll have plenty of opportunities on the rest of our favorite markets. So if you're an oil trader like I am, watch out for 10 o'clock tomorrow morning. It'll usually get pretty rough around the edges. Now, the good news is we also have some other news tomorrow. We get the new home sales, right, coming out here. Now, we just saw a pathetic existing home sales number on Monday, right? We talked about that on Monday. We get a new home sales number tomorrow at 10 o'clock. 10 o'clock, by the way, always a big time of the day, especially for a market like gold. So tomorrow morning, 10 a.m. Eastern time, we are definitely looking forward to some fireworks tomorrow at 10 a.m. Eastern time. So 10 a.m. new home sales, petroleum status report, the weekly inventory report for crude oil traders tomorrow. Again, right, watch that 10 o'clock hour tomorrow. And don't forget, we're going to be here 8 o'clock Eastern time tomorrow, right, in our trade room. And we're going to trade this entire strategy with all of our advanced members. Hope to see you guys there with me, 8 o'clock Eastern time tomorrow. All right, so now we know the schedule for tomorrow, or at least the major news coming out tomorrow. Let's jump into some charts now. We got crude, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bullish and trying to retest the high of a recent spike in channel pattern. But we're trading at the high of this range, which isn't a great place to start getting long. The bulls have the edge, and yes, we should expect to see one more leg higher. So the plan is to look for relatively aggressive seller failures for buying opportunities up into that measured move, and then we're watching to see if we can get either A, a breakout of the range, or B, a failed to try and a collapse back into the range for selling opportunities tomorrow morning. Now, the most important thing I can kind of show you right now here on crude oil is we zoom out and you can easily see, right, we are back at the high of this trading range, right? And we've been playing around with this range for quite some time. One try, two try, failure back in. One try, two try, failure back in. One try, two try, will we fail back in? That's what you would expect coming at the high of that trading range. So we're at the high of the range right now, and we expect to have sellers waiting up here. But you'll notice it's quite a strong bull run, right? We had this strong bull move higher into a spike in channel. Spike in channel patterns, we're going to see a bunch of them tonight. They're everywhere. We got them on crude, gold, euro, nothing on the Nasdaq or the S&P. Yeah, crude, gold, euro all have spike in channel patterns. Now, what does a spike in channel pattern tell us? We've talked about this many times on the newsletter. It tells me to look for a deep pullback, right? It tells me look for a deep pullback here for buyers now to buy the deep pullback and then run up to the measured move. And we get the measured move target waiting here overhead at that 69.29 area. We'll call that even, right, at 69.30. So spike in channel, this tells me that buyers are looking for a chance here now to run this up one more leg higher. And you know, anytime we see a strong move in one direction, we know the odds are pretty good, right? They're going to pull back and retest that high anyways. So I expect to see buyers here making a pretty good effort, right, to go back and retest the high at 05, and I would assume they're going to make it up to that 69.30 area. But again, right, look where we are. We're at the high of this range. So I do want to be a buyer in the short term, but I'm going to keep a tight leash on this because we have to expect that eventually, once we get up, we're going to eventually come crashing back down right later tomorrow. So what are we looking at on the crude? What's our plan? What if price goes up? What if price goes down? What if price goes sideways? And remember, everything I'm talking about right now, we've got to find it before 10 a.m. Eastern time, because as of 10:05, 10:15, the market gets all slopped up because the weekly inventory report, and then who the heck knows what the actual number will be tomorrow and how the market will react to it, right? I'm not in the business of predicting news events, right? I'm in the business of finding reliable chart patterns, going with the trend and using the law of large numbers. So as of right now, the market is bullish. What I'm looking for here is a way to get this spike in channel and get this second leg going higher. Now, to do that, couple options here right now. We've already got the pullback. And that strong pullback tells me that sellers are probably going to be trying to sell off the top of the range like a good seller should. The problem is this momentum is so strong going higher. So what I'm going to do is I would love to see a nice strong red candle down, get a nice bearish push lower, and then simply drop my order in for a failure pattern, right, to buy above that, basically buy into the sellers of, or into the stops of the sellers. So strong move down. The bears now are likely going to try again. If they can give me a nice strong red candle here, well, wonderful. Now I can place my order, place my bet, right, for that continuation, looking to be a buyer, right, up above. Again, you're buying into the stops. And we call this a failure pattern, right? It's a bull market, but we slip back below the moving average. The sellers confused as it being a bear market. They try to sell it. We, of course, know the odds are not on their side, and we look to buy into their failure, right? So that's if price continues, right, going higher. Right now, if the market goes here without me, right, if we just jump higher here right now, I've got to really be careful because we've got that high and we know that's the objective, right? That's the objective. If this market keeps going higher, it's going to run right into that objective. So I really have to focus on buying as low as possible here, right, as we go. Now, if price goes higher, there are ultimately two scenarios I'm watching for. One scenario is the breakout. And this is where we go up, back, up, and run. If we see this market really run in the overnight, right, and it looks like it's not coming back, now what I'll do is I'll grab a trend line off of that high, bring that trend line up off of that low, and look to buy, right, look to buy the low of that channel, right? We'll call this a spike and channel. So again, the key here is nice strong move higher, right? Nice strong, real strong move higher. If I can get that, I should be able now to leverage the prior high, right? The channel low, and look to buy down around that level of support for a spike in channel going higher. The other option now is if price goes higher is we see it struggle, right? If it struggles up here, then I'm simply looking for that strong momentum push back down so we can start selling as close to the high of that range, right? So you're selling the pullback, or maybe we go up, we tumble, and we really tumble down. I've got this rising support trend line here, and I don't want to sell the middle. So if that's the case, we'll look for that move up, and we'll look to sell off the high using a failure pattern, right? Buyers try once, buyers try twice, failure pattern, right? Back down into that range. So once again, just a quick recap here, right? We've got the pullback here for the buyers. If we can get a little bit of strength going lower here for those bears, we can then look for what I think to be the best opportunity here for the bulls, and that is buying into a seller failure pattern for that next leg higher. Then, once we do go higher, do we blast higher? If we do, mark them up, mark them up. Look to buy the low of that new channel. Or do we struggle through these highs? If we struggle the highs, I want to look for that sell now going back into that range. I want to sell as close to the top of that range as possible. If it just collapses down, we want to wait and get short either with trap patterns or with failure patterns up above that moving average, right, as we try to make that move right back down into that trading range. Remember, it's one try, two try, failure back down in. One try, two try, failure back up in, right? We had that great example last night. We had that falling resistance coming down. We had to get through it, if you recall, to use that as the buy. That was the initial scalp, right, going higher, strong move down, failure at the moving average, right, and back up we go. Buy those lows, sell those highs. We get a good plan on oil, but remember, time is of the essence tomorrow, right? Get to it early. Buy low, sell high. We should get one more shot here. We should get one more shot for one more leg higher. But again, if it just collapses back down, don't sell into that rising support trend line. Stay away from the middle of that range. If we collapse back down, mark up those levels of support and look to sell as close to the high, right, of that range tomorrow. Now, real quick, are you here for the first time today? If you're watching this newsletter for the first time right now, I probably have used a lot of terminology that you may not be familiar with, right? Ranges, two-try rules, measured moves. I've got a lot going on, right, on this nightly newsletter, and I want to make sure you get the most out of your time with me every evening. To do that, I'm going to give you a free trading course in the upper right-hand corner. Now, I know most people charge money for this stuff, but I want to make sure you get the best out of this newsletter every night. And if you're here for the first time, I want to give you all the terminology, the entry patterns I like to use, all the technical analysis tools. You'll learn about everything that we've talked about here tonight so far and a lot more. So grab that free course in the upper right-hand corner. There'll be an information icon up there. Go register for your free class. Trust me, it'll be the best. It'll be the best investment in your trading career. And the best part is, right, it's free. So grab that course in the upper right-hand corner, and that way you can make some better educated decisions, right, in your own trading here, right, using this newsletter. Let's keep going. Now we've got our oil out of the way. Let's grab our Emini. The S&P is bearish and trying to retest this morning's low, but as you can see, a rising support trend line is standing in our way. So we need to get away from this support trend line before we can sell this sucker back down tomorrow morning. Now the best way to sell this market is to look for either a trap high up in that battle zone, or look for a breakout pullback down below this rising support trend line and ultimately use it as resistance. So the bottom line is we saw this really great run higher here today until about 10:15, 10:30, right? And then we saw this strength, pullback strength, right? The market takes it lower, and of course we're now a bear market. Anytime the market reverses direction, we know, right, they're going to try to go back down, right, and retest that low. So that 28.11 area, I opted to go off this low instead of the actual low today. But this area right down here, right, that area right there, that is the goal. That is the objective for these sellers. So we know that bears are trying to get back down, right, to retest those lows. I want to sell, but the problem is you can see we've got one of those classic examples of a trend line here with 1, 2, 3, 4, 5 tests to that trend line. Now, again, you'll learn this in that free trading course in the upper right-hand corner, right? But there's a certain point where you have to trust or you have to respect a rising support trend line. Anytime I have more than 3 tests, right, of a rising support trend line, I know I have to respect it. You know, good example, right? You draw a trend line across here, you can see nobody really cared about that trend line, right? There's only 1, 2 tests to it. Right? They don't worry about selling into it, right? Use it on the opposite side. That's the plan, right, here for this trend line, right? Let's try to use that trend line on the opposite side, right? That's one option. The other option, right, is what happened here where they get up top and they sell away from that trend line. Right? So notice here how we have that rising support trend line. What happens? Bears want to get away from it. They look for a trap high, or, right, they want to get through it, and they look for what's called a breakout pullback pattern. So here's my new rising support trend line. I know the bears want to get down to retest that low. There's also a measured move target down here as well. And how do we do that? Well, first of all, I don't want to sell into, right, this rising support. So what can I do here? I can look to get up so I can sell away from it, or I can get through it and use it as resistance. Those are going to be, right, the two best options right now. So what if price goes higher here, right? Price goes higher. First option is a trap high above that 23.25. You can see I'm taking this trend line, creating a bit of a channel, and I like to use that channel as resistance. So one would be a trap high. If we can jump up, the moving average comes over. The buyers will then try to buy that pullback, right? I'll look for that sell into their stop losses. Now the problem with this, as you can see, it's going to be right into that channel, right into that rising support trend line. So rather than trying to, again, sell off the high, rather than trying to sell that failure, right, which we talked about on oil earlier, I'd much rather stay patient now, right, and get short below that trend line and use it as resistance. So the two most reliable ways to trade this are going to be a trap pattern up above that 23.25. And again, I'm trying to use that trend line as additional resistance. The next option here for the bears is going to be that sell using that support trend line, but using it now as resistance on the opposite side. Now, let's just say I'm wrong, right? Let's say we collapse lower here. What do we do if it collapses lower? Same thing, right? I'm trying to sell using that trend line, right, as resistance, right? So if price goes up, it's a trap into a failure, but skip the failure, take the breakout pullback. Price goes lower. If it jumps lower, we don't want to sell down here because that's the objective, right? This is where the market wants to go, right? So that's the objective. We don't want to sell down here. We want to sell up around that trend line. And a lot of times what happens is we get this, for example, we get the strong move down, right? The moving average will come over and you'll have to ultimately kind of get it up above that moving average. It's a little bit aggressive, but you'll see it'll hit that trend line and really give you a good signal candle for that move back down. Now, last but not least, just like we talked about on oil, I want to make sure we got both directions covered here. How does this market reverse? What does a reversal look like? Well, we already have a real strong move higher here. So if we can get another leg higher on strength, right, we'll get that 1, 2, 3 reversal. Again, you'll learn more about the 1, 2, 3 reversal pattern by grabbing that free trading course in the upper right-hand corner, right? Grab that free class in the upper right-hand corner. A 1, 2, 3 reversal is very, very simple. If we can get a strong move up, which we already have, right? A pullback to the moving average, which we already have. All we need now is another strong leg higher. If we see a real strong leg higher, now what I can do is I can take out my new channel. I can find a new spiking channel. I'm still going to leave this rising support trend line here. Right, we'll still leave that rising support trend line here, and really your buy area now is the low of that channel down around that rising support, right? So you're buying now off the low of that channel, right? Makes sense? Relatively simple there. So now we know if price goes up, we know if price goes down, right? And we know how this market will reverse. Let's keep going here from the S&P right now down to the Nasdaq. The Nasdaq is bearish with a strong move lower into a flag pattern this evening. And that tells me to look for selling opportunities either up above or down below that channel tomorrow morning. Now, the ideal selling opportunity will be flags, right? Or should I say the ideal opportunity with a flag pattern is to get short above the channel high using a buyer failure pattern. But if we don't see that opportunity tomorrow, the next best option will to sell the breakout pullback using the channel low as resistance. So as we see here on the Nasdaq, very strong, right, move down. But you'll notice the bears tried once, they couldn't retest the low. They tried twice, couldn't retest the low. 3 times now, 4 times. You can see that channel, right, forming now. Now, this is one of those classic scenarios where the market is still bearish, but yet we have a bull channel on the chart. This is one of those great examples where until we see that strength, pullback strength, right, until we see that 1, 2, 3 reversal, until we see the reversal, we have to continue to try to sell this market. The problem is, obviously, we have this rising support trend line. Right, so we talked about this on the S&P. What are my options here? My options are we go up and sell down, or down and sell up, right? That's pretty much our option. Either we go up and sell above the top of this channel, or we go through the low, right, enough to be able to use that channel as resistance. Those are the two best options for me. So first things first, right, up inside that battle zone, I've got this trend line I'm drawing down, right? I'm going to combine that up top, and that will be a great spot to sell. Really, I want to get up in this area right here, right? Up in that 74.5, 74.50, 74.28 area. Let's get up. Now, the key is get above the top, right, of that channel. I want to see the buyers try to hold the pullback here. This is a great opportunity here to sell, right, on a buyer failure, right? The buyers try once, they try twice. You'll see them. They'll try to hold the top of that channel, and if they fail, that will be our first opportunity now to sell into those stop losses. Remember, the market's bearish. Anytime the buyers try to run this thing higher, get ready for their failure, because their failure is going to give you an opportunity here now to sell into those stops. And when you sell into stops in liquid markets, they're great for a nice strong run right towards your first target. Now, once we go lower, we don't want to sell into that rising support. We then want to wait to see if we can get that strong move lower, right, and sell the underbelly of that channel, right? Pretty easy plan, right? Pretty easy plan. Now, that's if price goes higher. Now, what if the price just runs lower, right? What if it runs lower here, right? What if we run lower here? Well, again, I'm trying to sell the low of that channel. I know it sounds backwards, right? But it's a bear market, right? If we can't get that, right? If we can't get that, find that hidden channel, find some hidden resistance, and sell off the high of that channel. Right, so if we go low, if we go lower, again, I want to sell the underbelly of that channel, but if I can't get that pattern, I know sometimes it's tough in the overnight. If I can't get that, find those lows, line those lows up, and look for a hidden channel to sell off the high as we go down to that large, right, measured move. Now, right now, I've got the measured move here as a big leg down, but that measured move is really going to be one leg, pull back, two legs, so that's going to be our target, right, to the downside. We've got a nice big juicy target here waiting here on the Nasdaq down around that 73.11. If we were to reverse engineer this, that would put me right where we are right now. So we may not get much more of a pullback, right? You'll notice this, of course, is yesterday, right? Yesterday's low down there at 11, right? 45. So if I know that sellers are trying to get back down to yesterday's low, how can I reverse engineer this? There's my first leg down. There's my second leg down. Boy, that sure comes close, doesn't it? So we may not get that much of a pullback. There may not be much of a pullback. So now we know the plan, right? Price goes up. It's a failure, right? It's a failure into a breakout pullback pattern. If price goes lower, right, don't be afraid to find that new hidden channel. Sell off the high of that channel. Now, how do we reverse? What does a reversal look like? 1, 2, 3 reversal, right? 1, 2, 3. Big, strong move, right? That's the key to a reversal. It's got to be a strong move. If we can get that reversal, I'll look for that new channel. I can use that channel now as support. Look to buy the low of that channel for a target going back up to retest the high. We get the bears covered. We get the bulls covered. Let's keep this rolling. Next up, over to the gold here tonight. Gold is bearish and trying to rotate down to the low of what appears to be a triangle forming into the end of July. The sellers have the edge at this point, right? And this bullish spike in channel pattern tells me that buyers are going to try and buy this dip. So the failure of the spike in channel is going to be our best option for selling opportunities using traps and buyer failures up above that moving average tomorrow morning. Now, just to remind you, right, we talked about a spike in channel pattern at the beginning here today, right? Remember on crude, right? On crude oil, right? We have that bull spike in channel. And what do we know about a spike in channel? we know that they love to buy deep, deep pullbacks down to the base of that channel, right? And that's the basis of my anticipation of this one more leg going higher, right, up to that measured move, right? Well, now look what we're getting here right now, right? Look what we're getting here right now. Here we have a bear market down on the gold. Now, this is a great, great example of an almost 1, 2, 3 reversal. Look what happened. Strong move up, pull back to the moving average. Now, what do you think? Is that enough to give the bulls control? I don't believe it. I don't believe it is. And remember, this first pullback never pulled back to the moving average, so that's not a 1, 2, 3, right? We talked about that last night on the newsletter, right? That's why it's important to tune in a little bit every evening. That way you always get a little bit further along, right, in learning the right strategy. So that did not pull back to the moving average. It's not a 1, 2, 3. It's a 1, 2, 3. I don't think that's enough strength. So we know the bears still have the edge. Strong move down. The bears want to come down to retest that 18. I have a rising support trend line coming off of last week's low, so that's going to be a bit of a hurdle, right, coming in. And I have a falling resistance trend line coming down overhead. This is what creates the potential triangle setting up for tomorrow. The big clue, we know the bears have the edge. We also can see a short-term spike in channel. And where are we right now? Deep pullback. Absolutely. Now, very, very important. We know that buyers are likely going to try to buy that deep pullback. How do we know that? Because it's a spike in channel, right? And that's the classic footprint of a spike in channel pattern. But again, who has control of this market right now? The bulls or the bears? The bears do. So if I have the bears with the momentum on their side, but yet I have a small spike in channel that tells me that buyers are probably going to try to buy this up, this is an easy plan. Now all I need to do is look for buyer failures. And that's my plan for tomorrow. I'm also anticipating this may end up rolling into a triangle here as we go into the end of the month. The gold's done that a lot over the last few weeks here of this summertime season. So my plan is, what if price goes up? What if price goes down, right? What if price goes sideways? Well, first of all, if I can get the market to go higher here, right? If we can get it to go higher here, then we run right into that overhead level of resistance, right? That resistance coming down. Not a great spot for the buyers. But I'll bet you're going to see a lot of buyers that aren't going to see that, and they're going to try to buy that pullback. That gives me easy opportunity now to sell into those buyers' failure, right? Basically sell into the stops of those buyers. And when you get stopped out as a buyer, what happens? Right? You become a seller. So if we can get that pattern tomorrow, that will be a wonderful pattern, right? 1 try, 2 try, 2 try rule, sell the top of that range. Now remember, I don't want to trade the middle, right? So if for some reason we don't get that, right? If we just go lower here, right? If we just go lower, I still need to try to incorporate the top of that range, right? So I'm looking for traps, I'm looking for failures and selling off those highs. So if we don't go higher, stay patient for the price to go higher. And if we end up back down at this low here now, right? If we end up back down to that low, yes, I'm looking for the opportunity to get short down to that 12.18, but this is going to be a difficult area to be selling down here. You've got that prior week low, a big bounce, right? You're going to see a bunch of buyers here coming into the market at that, right, at that rising support trend line. So again, price goes up, easy. 1 try, 2 try, failure, back down. As price goes lower, though, what I'm looking for is I'm looking for that price to go 1 try, 2 try, and rather than trying to sell down here, I'm going to look for the rotation back into that triangle, and I'm looking for that buying opportunity going back above the moving average. The key, though, is after the 1 try, 2 try rule. Okay, whenever we have a trading range, we always know use that 2 try. So just like we're going up, right? 1 try, 2 try, failure, back down. Stay away from that middle. 1 try, 2 try. Now the difference is that the market's bearish. So I can't just buy into that seller failure like I would do selling into a buyer failure, right? You can see a nice little buyer failure right here, up, to try, failure back down, right? So we can sell a buyer failure at the highs of a bear range, but trying to buy the low of a bear range, what I'll do is I'll use the moving average, use the to try, wait for that move back above, and we'll try to buy the low of that range. Now look how I'm drawing this. Okay, it's very, very important we get one try, two try. Remember, it's got to pull back to the moving average, right? If it doesn't pull back to the moving average, it doesn't qualify for a 1, 2, 3. It doesn't qualify for the two try rule. Right? It's got to pull back to that moving average. And then I want to see that momentum jump. Right? You'll know it when you see it. Momentum will jump and looking to buy that pullback. Now, maybe we get lucky and we can buy the low of that range right there. But really what I want is I want to buy as close to the low of that triangle using the moving average, right, as my key level of support. And also don't forget tomorrow, right, if we do end up sitting in the middle of this range, just stay patient. One try, two try, fade it back down. One try, two try, momentum, and buy it back up, right? Two try rule, buy low, sell high. Because the overall momentum is bearish right now, though, I can aggressively sell buyer failures, right? But I have to be a little more patient to buy seller failures. Now, there's a lot going on this chart, right? One thing we do know, though, is that what a breakout would look like, right? What would a breakout look like? A breakout would be strength, pullback, strength, right? Strong move up, pull back to the moving average, strength, pullback, strength, right? We didn't get it earlier. We saw that strength, we saw a pullback, we didn't see that continuation higher. It's just not enough strength to the upside. So we still need to see that strength, pullback, strength. If we get that run higher, find that new channel, buy off the low of that channel, right? And you'll be good to go for a retest, right, of those highs at 35.2. But remember, anything less than a strength pullback strength, it's going to fall back down into that range. One try, two try, failure into pullback, buy the pullback once we see that momentum shift back in the right direction. Stay away from the middle, buy low, sell high. And again, you want to see a lot more examples of the two try rule. Grab that free trading course in the upper right hand corner. Grab the information icon, right? You'll learn more there. Let's keep going. How about some euro tonight? Wrapping up here on the 6E, the euro futures are bearish and trying to retest this morning's low. But buyers are trying to retest the high of this short-term spike in channel, which tells me the most reliable selling opportunities will be after I see these buyers fail to retest the high. So my plan is pretty simple. Look for buyer failure patterns up above the moving average with a target down at the low tomorrow morning. This is very similar to gold. Strong move down. We're expecting now those bears to want to retest that low. If they can go through that low, then we have a measured move waiting just below, if we zoom out a little bit here, right, just below last Friday's low, right? This would be your measured move, one leg, right, two leg, down to that, right, down to that 16,600 area, if you will, right? So the bottom line is we know we're bearish. We know the market wants to retest that low at 17,000, right? Strong move down, pull up, retest that low. That's the objective, 17,000, right, on the euro. But look what we have, another spike in channel pattern, right? Bull move up, pull back. Now you tell me, does this look like a strength pullback strength? Does a double top in a bear market look like strength? No, not at all, right? Please do not say yes, right? It's not enough strength. So we had a strong move up. We got the pullback. We had what looked like a lot of promise. But again, does that look like the bears gave up on this and let the buyers take it? No, right? This is definitely still a bear market. Now, there's no doubt about it, though, that is a spike in channel. And we know that spike in channels love to pull back to that deep base of that channel. So what are we expecting right now? I'm expecting to see some buyers, one last ditch effort to run this price higher. And that is where we can look for the sell. I've got a bear market. I want to sell at resistance. A beautiful resistance level is this trend line. Remember, anytime you've got 1, 2, 3, or more tests of a trend line, you've got to respect that trend line. So what if price goes up? What if price goes down? What if price goes sideways? If price goes higher here, this becomes an easy one now. I'm hoping that buyers will try to buy and hold that pullback. If they do, I now know where their stops are. I can sell right into their stops. Now, in this example, though, we got plenty of room to go down to retest that low. So why not look for a pullback pattern to put the cherry on top? So it's going to be a buyer failure using that 2-try rule, and then into, of course, a seller pullback for the target where target's back down to retest that low. Now, what if we go sideways here? Because you can kind of see how it's looking pretty nasty right now, right? If we start seeing double bottoms here, right? We saw a good example, let's say on oil, right? If we see double tops or double bottoms here, we start seeing a trading range. Now, this is a bear bias range, so what do we want to do? We want to sell above that high, right? Or sell down below that low. Selling high will be easier. 1 try. 2-try. Remember, anytime we have a trading range, it's the 2-try rule. 1 try for the buyers, 2-try for the buyers. Buyers fail on their second attempt. I'm selling this back down, right? Looking for that sell as those buyers collapse. Target is back down to retest the low. Now, that's relatively easy. The hard part, though, is if we do start going sideways, right? If we're going sideways here, double bottoms, the hard part's going to be if we get a breakout. If we get a breakout, now we got to get that moving average down below that low. That means strong enough, right, for us to sell and use the low of that range as resistance. This is going to be a bit of threading the needle, and you've really got to be careful. This is the pattern I really don't want to take tomorrow because you know where the target is. And as we get closer to that target, what's going to happen? Well, it's what's not going to happen is what's important. We're not going to have many sellers that want to sell down here, right? If I get a trading range here in the short term, sellers are going to eat this up if we can go higher, right? They're going to love that to sell because there's plenty of space now for a big target. But if we try to go lower, those bears are going to go, oh boy, there's not a lot of profit potential down here. So be very careful trying to sell down below that trading range. Now, easier would be if we go lower, right? If we go lower here and we don't pull back. Anytime I find myself in a position where the only option is to sell low or sell into support, I start looking for traps. I know I have a resistance trend line coming down. I'm going to look at those prior swings as we go lower and try to find my way into a trap, into a failure, and finish off that move, right? Trap high, be above a prior swing, buyer failure, right, above the moving average, right? Buyer failure above the moving average and back down to finish off that low. Again, just make sure you remember the bears have control. So anything that goes up and fails, we want to sell. If it goes lower, though, be careful down here because that's where the goal is, right? That's where the objective is. So if we do keep going lower, right, you focus on traps somewhere up above those prior swings. Again, use that trend line as protection, right? Use that trend line as protection. We'll use trap patterns, buyer failure patterns. Probably not going to be able to use a pullback pattern because, right, we're going to be too low, right, to sell down around that low. Last but not least, how do we reverse? What does a reversal look like? Well, boy, they almost had it earlier, right? Strength, pullback, strength. They almost had it out the gate this morning. Strength, pullback, strength, right? Really got to be strong that second leg higher. Then we'll grab that new channel. We'll look to buy the low of that channel, right? We'll try to use as much of this as support as we can, right? Target, of course, is back up to retest that high around another big round number, right, at 18,000. So we know the plan if price goes up, down, or sideways for the bears. We know what a reversal looks like, right? What else did I miss here? What would you like to see added on to our nightly newsletter? Drop me a comment in the comment section below. I'm always trying to improve on this nightly newsletter. And in the meantime, Don't forget, you can learn a whole lot more about this entire trading strategy by joining our free trial. It's the best in the business. Go to schooloftrade.com, grab that free trial. I'll shoot you an invite to come out and join me in the trade room, get a behind the scenes look at what it feels like to be a client, get a free trading course about what I use every day in our trade room. And don't forget, speaking of our trade room, we've got great classroom sessions here, beginner, intermediate, advanced classes. Check those out on our website as well. And again, give me a call anytime here in the office. Drop me a live support chat on our website or drop me a comment in the comment section below. Guys and gals, I put a lot of effort every night into this newsletter, and it means the world to me that you guys attend here every evening. So thank you so much for tuning in tonight. Make sure you come back and see me tomorrow, 8 o'clock Eastern time. We'll be in our trade room. And of course, if I don't see you guys tomorrow morning, same time, same place tomorrow night on our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.